4, 3, 2, 1.
Yeah, welcome everybody. Today we talk about crypto funds and asset management in the area of crypto. We are not talking so much about security tokens or digital assets, but rather about crypto assets and how crypto assets can also be leveraged, for example, through all kinds of funds, trading technologies, and so on. With this, I would directly like to hand over to Frank to quickly introduce himself and his company briefly. And then afterwards, we're doing the entire round, Kai, Jörg, and Leon. Then please also everybody present yourself and your company, because it always makes sense to give the audience a little bit of a background and context, who is speaking here and what is the background. Frank, would you like to start?
Yeah, my pleasure. Thanks for having me first. I always enjoy these groups and these panels because we have a lot to discuss about crypto, Bitcoin and co, how to invest, regulation, opportunities, and so on. My name is Frank. I'm a co-founder and CEO of Invalid Group. We are a Liechtenstein-based asset manager. We do offer bankable products for Bitcoin and co, but our main focus is currently, due to regulation, on managed accounts. Managed accounts, that's a portfolio of crypto assets on our customer's account, actively managed by our trading team with a lot of algorithms and stuff.
Excellent. So this is something like a crypto fund. You have been a crypto fund. You probably will be a crypto fund right now. For regulatory reasons, you are focusing on managed accounts, right? Okay. Who's next? Maybe Leon, would you like to go next?
Yeah, absolutely. First of all, also thank you a lot for having me here. It's a pleasure to speak here. My name is Leon. I've been at least interested in crypto since 2015. Had a couple of gigs, actually worked at Block-Size Capital, where Jörg is working right now, for a couple of months, half a year, as a quantitative trader, and then worked at a high-frequency trading firm, trading solely cryptocurrencies. And now I built the executive management level together with Felix Fernandez for 21E6 Capital. What is 21E6 Capital? Essentially, we are a Swiss investment advisor seeking to connect institutional clients, high net worth individuals, and professional investors as a whole with crypto fund investments, right? So we see a value proposition in crypto funds and many ways and how they're actually better than direct crypto investments. And 21E6 Capital idea here is to find the best crypto funds out there in a huge universe of nearly 1,000 crypto funds by now, and basically advise our clients to invest in exactly the right fund.
Excellent, thanks very much. Then Jörg, over to you. You're sitting in beautiful sunshine over there, wherever it is.
I have a Hong Kong background. Alludes a little bit to my background. I spent more than half of my lifetime in Asia. 20 plus years in Singapore, studied in Korea and so on. Came back a few years ago to exactly transition out of my traditional financial services life with Credit Suisse and Julius Baer and DBS Bank in Singapore into the startup and crypto and DeFi scene. And yeah, I'm not looking back. It's been a hell of a ride. It's an interesting area. I'm CEO at Block-Size Capital, and Block-Size Capital builds exactly the infrastructure to enable traditional financial players to tap the crypto markets. Anybody who knows how difficult it is sometimes even for a private person to open a wallet, to transfer funds, to on-ramp, off-ramp, and all these things, you have to imagine this magnifies when you're talking about institutions, including all the risks involved, and this is what we have to solve. So it's an interesting area. Yeah. So we prefer to be quiet and efficient in the background, white label, we see the interest definitely rising a lot. So it's good to be on this panel and to exchange some opinions and views on the industry.
Excellent. And then finally we have Kai here. Please also present yourself and your company briefly.
Yeah. Thanks, Philip. So I'm Kai Kaischen from here based in Berlin. I'm responsible for the sales department of Rubenstein Schmieder. Actually, we are a tech company founded in Switzerland, but now we established a Munich company and also a Berlin branch since a week. And yeah, well, we are not only into cryptocurrencies. We established artificial intelligence, so a technology which is fully automatic, and we started with a prop trading company in Liechtenstein. And well, some of you know our performance from this prop trading company, so it's yeah, quite successful, I like to say. And right now we are yeah, on the steps to establish the fully regulated European fund with the same background, with the same system, and that's our goal. And yeah, thanks for having me.
Thanks very much. So let's directly start with the topic. So we have been discussed previously a little bit, where do we stand with regards to Bitcoin, for example, in Switzerland, but also in Germany and in Europe. Maybe to get started, what is your opinion about where are we standing here? Are other countries, Singapore and so on, already spearheading us and basically overtaking us, or are we in Germany and in Europe still at some kind of leading edge? So what is the position here in total? And are people primarily interested in Bitcoin or in Ethereum, or are they interested in arbitrage fund, market making funds, ETFs, ETNs, asset management, managed accounts? So what is your impression about the general, let's call it, status of the industry with regards to crypto assets, asset management, Bitcoin, also with regard to Europe and other domiciles? Who would like to start? Frank, would you like to get started?
Yeah, my pleasure. First, the question: are we here talking about politics, or can we talk straightforward? So, what do you expect? What is the audience expecting? I think no more clear statements, right? So,
yeah. Be polite.
Straight to the point. We are very early, especially in Europe, and that's my gut, not my gut feeling. I can also see this in the numbers. Based on the numbers, we are very, very early. And I'll give you an example. I'm today in Vaduz, Liechtenstein. Here's some big international finance forum, as big as it can be in Liechtenstein. And I just checked the list of the speakers and what are the main topics. And everybody's talking about KYC, AML, regulation, new stuff coming, how to avoid to make mistakes in the financial service industry. Nobody's talking about opportunities. Yeah. And that's really the biggest problem we have here in Europe, and with Germany being the largest economy in Europe. We are driven by the avoidance of risk. We are not taking the opportunities. And I really took a very hard job over the last couple of weeks. I was really reading all the programs of the parties going to the elections in preparation for the elections. And I really figured out there's, with the exception of the Liberal Democrats, the FDP, no party really being optimistic or open to crypto. Yeah, and it's an issue. We are talking about ESG, we are talking about an AML, about all these risks, about more regulation, more transparency. And I think that's a big problem, and we are going to miss the future again after Internet 1.0 in the 90s and 2000s.
Okay, interesting point. I will come to this point back after how we can basically take up the opportunities. I also have the same feeling, but probably Liechtenstein is extreme. Liechtenstein people only earn money in case they somehow solve regulatory issues produced by the government, right? So at some point of time, they have to showcase AML and KYC stuff. And and how to solve it. Otherwise, Liechtenstein has no business model, right? But like talking about the crypto topic and crypto asset management once again, Jörg, would you join this opinion? You know, you have a very international background here, and also, if you wish, you know, please tell us a little bit of what's happening in your sales department. Are investors more and more open? Do they like your solutions? Do they like, I don't know, ETP solutions and other solutions even better? Please also tell us a little bit more.
Yeah, I would say I agree. Europe is lagging, but it's if you talk to institutions, bigger investors, it's on everybody's radar. Definitely, everybody's thought about it and weighed the pros and cons. The problem is that, as Frank just mentioned, many still think in terms of risks. But we shouldn't forget that in Europe, here, a lot of the market is driven by trying to create a product and push it to people. The adoption from the bottom, such as in where we say where the biggest use cases for these currencies and for these for the technology is, like in Africa or in Southeast Asia and other countries, where the push comes from the base. You know, I think there'll probably be more volume, you know, to move the markets. An example is, for instance, you know, the Axio game in the Philippines or whatever, you know, where millions and millions of people just, and nobody's pushing this, nobody's selling this, you know, this is a generic adoption by people. They play a game, they earn a coin, then they trade the coin, they use the coin to, so it's not an abstract, just an additional product we're trying to push into the market for asset managers, but there's generic adoption. So we have this in Southeast Asia, more and underbanked or low bank countries. And of course we have the US, you know, where a lot of things have moved much faster than here. Switzerland is definitely, because of wealth management and asset management driven, you know, part of the industry where the product side is probably shaping up, maturing a lot. But I would think that we're catching up. Like I said, we're getting a lot of interest, but I have to say we're spending a lot of our time still on basic education and telling people what the market is about, what the risks are, and you know, when we ask people what are the challenges in to getting into crypto or even setting up funds, you know, the risks come up first. You know, hacking, security, tax, regulation, and so on. And it's less about. One more thing that I want to mention is we also shouldn't forget that funds are usually one side of the coin. You know, the other coin is why our funds set up, because investors fund projects on the other side. So the primary market for these things is also, apart from just currencies, you know, is also not up to speed yet. You know, it's still very early days. Yeah.
Good point. Maybe, Leon, would you like to add something? You apparently have quite a good overview over worldwide crypto funds, right? So where the use activity, right? Is it happening in Asia, in UK, US, Switzerland, and so on? Where are all these, what did you say, 1,000? Where are all these 1,000 crypto funds, including venture capital funds, being located?
Yeah, so exactly right. There's about 952,000 crypto funds worldwide, and we definitely see that the market there is quite unconsolidated, right? It's definitely US driven to some sense. Most of the legal structures, at least the LPs in these classical GP LP structures, which are being borrowed from the hedge fund industry, which we see largely in crypto fund structures as well. They locate themselves on the Cayman Islands and the British Virgin Islands. Now, when it comes to the GP, the general partners, you see Switzerland, the US, and others. But I mean, crypto is a global phenomena, so naturally you would see them spring up everywhere. And it obviously also depends on what kind of investor we're talking about, right? Retail investors, naturally, they're everywhere. The US is a little bit a walled garden in that sense, because they have their own exchanges and stuff. They're rather like isolatedly regulated. When it comes to professional investors, we see a little bit of a different pattern. They more clinch to either ETNs or ETP products, which kind of try to build the bridge between the crypto sphere and the traditional markets, or they go into crypto funds, which solve a couple of problems for them. For example, the lack of infrastructure, which Block's capital is trying to tackle. But as Jörg already said, there's also a massive domain-specific knowledge needed to invest correctly here. And so traditional investors try to outsource this to crypto funds to basically let them make the informed investment decisions that they themselves cannot do.
Okay. Just to interject, I think the biggest potential, at least of people who have declared that they're moving into this area, it comes from the hedge fund industry. I think about 312 billion are projected to move into the area because roughly half of traditional hedge funds have said that they're looking at the asset class and are actively running models to integrate this. This would translate to 312 billion US dollars, and that's a massive amount. So I think there'll be a large push from there due to the nature of hedge funds, I guess. But of course, there's also challenges, lack and depth of derivative markets in this area and so on. But I think once those puzzle pieces come together, we look at some pretty big potential, which will drive the overall market, of course.
Okay, excellent. And Leon, maybe a follow-up question here. What types of crypto funds are you seeing there? What is the share of venture capital funds? I think they need to be put away because they are not true crypto funds, right? So what is the population of funds? What are strategies out there? And also then I would like to find now and also then ask everybody here in the room the following question. So why should you purchase such a crypto fund? Why don't people just buy Bitcoin, right? They are very often still educating themselves on Bitcoin. So why should they purchase a crypto fund? Because it adds potentially another level of complexity, right? But first, Leon, maybe please show us the population of funds.
Yeah. Essentially, building up on what Jörg just said, he mentioned that hedge funds are essentially the first movers here, getting themselves some crypto exposure in the traditional finance. It makes sense because crypto is actually a very high volatility instrument, about 4 times as high as equities, right? And that is something maybe hedge funds dare themselves to do. Absolutely nothing that mutual funds per se are interested in yet, at least. Well, excluding VC, as you said, basically over 50% of all the funds we have in our database at 21E6 Capital are VC funds, right? I mean, you could make the case that they are crypto funds, but they have extremely high lockup periods. And essentially, it's not really about the cryptocurrency or crypto asset, but about supporting the team behind it, foundation. Maybe they're going for an airdrop or something. And the second biggest group here in terms of strategy are quantitative funds, right? So like Rubinstein and Schmiede. And that is very interesting because, I mean, the cryptosphere, as mentioned before, works very, very differently compared to traditional markets. And many investors, they simply cannot handle the volatility. They don't have the tools. They do not translate from the traditional markets, the quantitative models, through the cryptosphere. So the idea here is to invest in quantitative funds with either a long bias that try to take some of the volatility out, or invest in market neutral funds. So right, there's hundreds of those that do arbitrage or DeFi lending strategies, which have no crypto exposure at all. They have a beta of 0. They still manage to do some 20-30% a year. And those are actually funds that are more interesting to more risk-averse investors, right? And we see those coming up in the crypto funds where, and also they are more scalable now that the crypto ecosystem is growing and volumes are increasing.
Okay, can I take it from here or somebody else? So just my observation is that investors are looking for uncorrelated, yield-generating, compliant investment opportunities. So crypto is mostly uncorrelated, has a very low correlation to other asset classes. Also a good hedge against inflation risk, and so really good opportunity. I would rather give the advice to forget about the volatility, because the volatility is just, if you look at really on the specifics of the crypto markets, people are dealing with a very, very high leverage. The exchanges never close, so it's 24/7, and that's the reason for the volatility. If you look on a yearly or quarterly basis, that the volatility is lower and it looks really good. You always make money. So low correlation, high yields, and the third point is the compliance. And that's the reason why, coming back to your question, Philip, why we need bankable products based on Bitcoin and crypto. So all the things, how to buy crypto, custody, and that's really, really high complex. We need bankable products. And that's why we need a good regulation and rather support by the authorities than hindering structures and always new discussions. And what my fear is that we, especially in Europe and especially in Germany, where I do most of my business or a big part of my business, is that we lose focus. Nobody is talking, or less people are talking about making money and seeing the opportunities. We are talking about ESG, talking about crypto. Always, I don't know what's your experience, Jörg, Leon, Kai. What I get is, wow, that's all China, that's money laundering, that's CO2, that's Elon Musk. All wrong. I can repeat it again and again, but that's the discussion I have. And my gut feeling is people are not really interested in answers. At least not everybody's interested in answers. They're looking for excuses to not to do it, to avoid action. And that's especially for the financial service industry, that's not how we usually make money.
Okay, but Frank, how are you helping here? You know, how can people basically ask you to help them clarifying things, investing, and so on?
First of all, we all do, and we have to do a lot of education. Yeah, so it's not the right time and not the right discussion group or panel to explain again and again talk about ESG and so on. I think it's just not the right time. So let's skip this for now. What we do with Invalid, we have these managed accounts. So we help investors to open their own account on their own name with leading crypto exchanges, and then we plug in our algorithm and give them advice and trade in their name. That helps them. So there's no counterparty risk, and it's daily liquidity, no lockup periods. That helps to get started with this kind of investment. And that's very successful. But also here, I see a lot of interest coming outside of Europe. So most of our investors come from emerging markets, just to support what Europe said. So they are faster again. And of course, we have French clients, we have German clients, we have Swiss clients, but they are followers. They are not the leaders in this movement.
Okay, interesting. Well, you can still be at the forefront when you are following. You do not necessarily have to lead the entire industry, but it's a little bit of a pity.
It's the general sentiment, especially in Germany.
Exactly. It is because you know that the chances are so high, and I also sometimes wonder myself, because you know I think now it's really clear that blockchain technology is coming, and there is no way around blockchain technology.
Absolutely. And there's just one sentence, Philip. I don't want to dominate the discussion. Just one thing, and that is very, very easy. I always get this question: isn't it too late to buy crypto? And I will always say no. Is it too early? That's the other question. But it's not too late. Yeah. So better to buy Bitcoin and Co today than tomorrow or in 1 year. It would be better to have it done a year ago. That always works.
Yeah, it's always easy. But it's. I wonder myself that people are not just investigating crypto with more intensity, you know, educating themselves and their colleagues with more energy and so on, because it will come inevitably. There is no way around. So people have to educate themselves and their colleagues at some point of time anyway, you know, be it in 1 year, be it in 2 years or in 3 years. So there is no way around it. So why don't people are just doing it now? That is something I'm wondering. But this is also applying to universities, by the way. There are, I don't know, maybe 10 professors in Germany being able to educate people on blockchain matters. But this number didn't change in the last 4 years, right? So what's happening there? Is nobody seeing these huge chances? That's what you have said, Frank, right? Okay.
Sorry?
It's
your mission, I mean, to teach the market.
Exactly. No, it's fun. You know, it's fun working with people, and it's also fun educating people who want to be educated and who are asking, right? But it's not so much fun educating people in case they don't want to hear it. So it's basically, in case education is becoming convincing people, you know, then that's getting really, really, really tired, right? But in case people are asking openly, what is this? How does it work? I want to understand it. Then this is definitely fun. But okay, let's go back to the topic. So we talked about the opportunities, right? In a generic way, but maybe Frank, once again to you, what are the opportunities? Is it just about earning money? Is it about having a decent career? Is it nice for young people working in interesting companies? So what are the opportunities? And then of course, you know, to balance this, we also have to talk about the risks.
Yeah. So I'm approaching this area from an investor perspective. So without talking too much about myself, I started my career in the early 90s. I never had a job where my mom knows what it exactly is. So I started with the internet, with big data and all these kind of stuff. Nobody understands. I was always too early. Yeah, that's a little bit the tragedy of my life, that I try to explain opportunities of the future to an audience not really willing to get it, but it's also my passion. Yeah, so when I joined the space in the area in 2016, it was very early from today's perspective, but today is also still very, very early. And I think it's a big opportunity for investors like me and our partners, because it's just the next wave of the digital economy. It's the internet of values that is so big. And if you take Amazon just disrupting retail, Google and Facebook disrupting media, that's already big. It changed all our lives. But the internet of values with Bitcoin and co is disrupting the financial service industry. That's 100 times bigger. So honestly, I cannot see any reason to miss this now and say, okay, I will look at it again next year or in 5 years. That will be not too late, but now it's just the right time. So the risk-reward ratio is just perfect. So most of the risk is gone, or some of the risk is gone. Bitcoin is here to stay forever. And it's still early to invest, not only in Bitcoin, but also in the other coins and projects.
Interesting point. Who wants to add something? Maybe Kai, would you like to add something on opportunities to investigate crypto assets, to basically invest in crypto funds and so on?
Yeah, thanks. Well, I want to mention again what Frank said about the regularities, because he said that we are too early, and I think the authorities try to catch it up a little bit. But for us, it's super it's super hard to establish our products, our new products. Nobody knows really not in the audience here, but in the world, what actually we are doing or what Frank does in the past. You know, so that's a very big question, and these regularities, I think, changed slowly, but we are on the way. So maybe we are a little bit too early, but we are on the right track, I would like to say. And of course, I mean, what are crypto funds? It's not actually a super new product. I mean, it's another financial instrument, you know? I mean, the whole financial industry had problems, or not problems, like the question of MiFID II and everything. Every company had to follow these regularities, which is, yeah, quite hard to catch up. So as long as we have a chance to educate the world and the people that our new financial instruments are not like the bad way of investment, and the opportunities are quite high, then we can successfully help the world to get up again.
Okay, thanks. Maybe Leon, another question concerning crypto funds. Is it basically possible to reduce the huge degree of volatility when investing in Bitcoin to level this somehow out, such that basically people can invest in crypto assets without this huge volatility of Bitcoin? Is this somehow possible, for example, focusing on market making funds, arbitrage funds, and other things?
Yeah. So first of all, looking at the funds that actually do have crypto exposure, such as Rubinstein and Schmiede, there you can also have some strategies which try to reduce volatility. And that definitely works to a certain degree. You see some reductions of maybe aggregated 30% of volatility if you look at these beta exposed funds. But exactly what you said, market neutral funds here come in extremely handy on a theoretical basis, and this is what 21E6 Capital is researching. You could combine these funds and basically create a portfolio with very sizable returns, still around 100% annualized over the last couple of years, but reduce the drawdowns, maximum drawdown of Bitcoin, maybe around 70 to 80% in the last 5 years, which is absolutely substantial. You could reduce those to maybe 25% by allocating 50% of your portfolio into market neutral funds. And the actual added benefit here, Frank mentioned the term correlation. These market neutral funds, arbitrage funds, they are actually to a certain degree negatively correlated to the crypto universe as a whole. Which is simply due to the reason that when the markets are going down, the volatility is extremely high, right? So downward volatility is always stronger than upward volatility. And these market neutral funds, they use exactly these moments where crashes happen to find price inefficiencies and differences across exchanges and make money through that, right? So if you combine those, you can actually take out substantial a part of the risk of crypto investments and actually arrive at a volatility level of equities if you go for that 50-50 combination. So it's definitely possible to take out the volatility. And this is something that is desperately needed for institutional investors to enter the space, because that is just something that is extremely scary to somebody from traditional finance backgrounds to look at these drawdowns, right?
Okay, and another point is it also possible to reduce the energy footprint of Bitcoin? For example, are there crypto funds out there who focus on all kinds of crypto assets, but leaving out Bitcoin for ESG reasons? You know, just out of curiosity, are there some special crypto funds out there leaving out Bitcoin, right, for ESG reasons?
I mean, there is definitely some funds out there leaving out Bitcoin. Not only for ESG reasons, but that too. It's actually super easy. You can basically outweigh or rebalance the CO2 exposure of Bitcoin using certificates, right? This is also something 21E6 Capital is researching on, because basically we cannot deny it that Bitcoin does cause a substantial energy consumption. So funds definitely start looking into that, how to basically offset this CO2 footprint using certificates or other options. That's out there, yeah.
And Frank and Jörg, are people you're talking to having the same discussions, you know, reducing volatility, improving the CO2 footprint of the assets, I don't know, reducing Bitcoin exposure and so on?
Yeah. I mean, also diversification, you know, because there are cryptocurrency funds, but we said we have the VC funds, the crypto ETFs coming up. There are funds that only invest in decentralized projects. There's the NFT funds coming up. So the space is moving very, very fast, and it gets very exotic in some places. But all these are developments that also cause for more diversity and more chances for people to look at different things. What I also just mentioned is that a lot of the strategies, typical hedge fund strategies, because the hedge funds want to move into the space, some restrictions are, of course, the lack or the, let's say, also price reasons, in the derivative space. But this, futures and other derivative instruments that are used by fund managers to reduce risk are also developing. The markets are developing, the prices are improving, and so it can only get better. I just keep saying, despite all the fig leaves that people are looking into, to justify that they're not doing things, this is the right point to get in, because from here it will only get better and more interesting.
Very interesting. And Frank, what about you?
Yeah, first of all, volatility is our friend. That's very important to understand. So volatility is the price we pay on our road to success. Without volatility, we are going nowhere. It's an early market, and volatility means movement, nothing more than movement. And movement is good, change is good. So I would say, as an investor, you have to live with volatility and really see it as an opportunity. It's very important. And ESG, honestly, I don't see any technology, especially in the financial service industry, which has a better ecological footprint. I really mean a good one, because value creation is not depending on the place where you generate the energy. It leads to for this discussion, but I see it positive, especially when you compare it with the financial service industry at all, and gold mining, for example. It's social, it's libertarian even. Yeah? It's really social, and governance, it's transparent, it's so important. So Bitcoin and crypto is ESG at its best. And if somebody is telling you something else, please, let's really have a good discussion about this topic, but not the typical paradigms shared by some media. I don't like it at all.
Okay.
Sorry to interrupt you.
No, I'm done.
Okay. Let me just add one point, because you all speak about volatility, and of course it's our friend. Or let's say for us, when it comes to volatility, we use our artificial intelligence to reduce volatility. So, and for example, with our prop trading company, our Sharpe ratio is more than 5. This is 3 times higher than Bitcoin. So, and to put this together, the cryptocurrency and the volatility, the high volatility, and the usage of artificial intelligence, this makes this financial instrument much more successful compared to the whole financial instrument.
That's important point. We at Invalid, we do the same. So we have some instruments. So it's all driven by algorithms as well. We have some instruments like liquid exposure. So we reduce our exposure with respect to the market cycle and the current market situation. So our max drawdown is by far not so dramatic as with a full exposure in Bitcoin and Co. on altcoins. So, but again, it's part of the game. Volatility is not the biggest risk we have.
Okay. Yeah. We have one question coming from the audience. A person has been asking, who are actually the investors in managed accounts? Frank, this goes to you.
Yep.
One second. And what are typically the ticket sizes once people are investing, and are there any minimum requirements?
Yeah. It's for regulatory reasons. It should be a legal entity, not a private person, a natural person. And so we are talking to entrepreneurs, for example, managing their cash, so treasury management for companies, and wealthy individuals. So we are dealing with them. The minimum ticket size is 100,000 Swiss francs or euros. And it's an individual process. You can find it easily on our website. I will just share it here in the chat, so you can also see a fact sheet and all the information about it.
Excellent. Anybody wants to add something? Ticket sizes? Who is basically investing? Retail?
Sorry, who's basically investing? Yeah, more entrepreneurs, high net worth individuals, and ticket size 100K is the minimum. Average ticket size is $500,000 or so. And so it's not really the big money, but it's not a retail product. Professional investors.
Perfect. Anybody wants to add something here?
Yeah, sorry. I can say from the fund side, the minimum investment is 200K. This is also because of regularities here in Germany. And our main investors, we're speaking to also high net worth individuals, but more like family offices, multi-family offices, these kind of like I would say big investors, portfolios with 2 billion or more. That could be a good portfolio for. I think Jörg mentioned it, diversification. I mean, we don't say that use our product to push up your account and put 100% in just one asset. Of course, no. So it's of course a kind of diversification and also maybe hedging against the standard banking system that maybe also.
Okay, interesting. Jörg, you want to add something?
No, just listening to this, and logically we can see that by the entry levels, even though the technology itself should be something that is easily accessed by anyone, that we're trying to squeeze this technology into the old financial system structures of distribution of funds and the regulation and so on. So there's some inherent friction, of course, and a lot of people are excluded from this market, and that's why we don't get the volumes that we need. So it's a bit of a chicken and egg question. But yeah, there's much more potential if the broader masses, are getting access to these kinds of things.
Interesting point. What about the general regulatory framework? How would you value? This is also a question coming from the audience. How would you value the European legislations versus the US legislation? Because especially with regard to the USA and also the SEC, currently being headed by Gary Gensler, we see some kind of skepticism arising with regards to DeFi protocols, cryptocurrencies, and so on. And yesterday, apparently, a Coinbase product, which is lending, has been now put under scrutiny by regulatory bodies in the US, right? Basically, not necessarily out of nowhere, right? But in case you're trying to build a company and you are thinking you are working on a legal ground and suddenly the regulatory environment is basically changing, rendering your offering potentially critical, right? This is not very good to further growth. So what's your opinion about valuing the EU legislations, regulations, with the US ones, maybe with Asian ones? So where do you see most of the funds being prospering, growing, and rising? It's a difficult question, I know. Who wants to give it a trial?
I mean, generally, everybody I think agrees that we need regulation, and I think regulation, informed and constructive regulation, will drive adoption. There are some elements of this industry that need somebody to have an eye on it, and to safeguard people's interests. But unfortunately, regulation is often not driven by practicalities, but by politics. And politics looks at covering, I almost say covering ass, but like covering risks and looking at downsides. And that's why we have this conundrum that on one hand, people know that the genie's out of the bottle, and this will develop definitely. On the other hand, of course, central banks and financial regulators still reel from the last financial crisis and how it hurt investors, retail investors, and they feel it's safer to just block everything. But of course, that's not the way forward. So, but I expect at the end of the day, the strongest lobby will decide. Some of the big financial institutions like Coinbase, you can call it a financial institution by now, and others are lobbying very hard. And it's a question of money, of course, in the US as well. And I think they will get their way. if they appease the governments, and show them that, there's no money laundering involved, no terrorist finance involved, they will get their taxes and these kinds of things. Yeah, that's what I see.
Maybe I'm next. I agree with you, Jörg. Genie is out of the bottle. And I think it's very important for governments, especially in Europe, to recognize that fact. So Bitcoin is here to stay. DeFi is here to stay. It will not go away. So as a government, my advice is find a regulation where you can be sure that you get your taxes. So tax it. I would say capital tax in Germany, 25% or so. I know that most of the political parties have a different approach to it, whatever it is. The only thing you can do as a government is taxation, but it will not go away. And looking to the US and also the SEC, they are faster than we are in Europe. So again, we are very late, very slow. And looking on the capital markets in the US, I see there more than 15 billion US dollars now, assets under management coming from professionals or institutional investors. In Europe, this number is so small. And just imagine that we embrace this opportunity and create a good environment here in Europe. And we have the same market size. We have this 50 billion assets under management here in Europe, and we can tax it. That's a big opportunity for the governments and for all of us.
Yeah, interesting point. So to also pick up one thought from the questions from the audience, talking about Bitcoin ETFs, right? What's your opinion about this? Is Bitcoin ETF an option for investors to basically take their feet into the water, like to try it out, to test it? And by the way, over here in Europe, we have already like a couple of Bitcoin ETNs out there, not like a real ETF, but something like an ETF called ETN, ETP, mostly sitting in Switzerland, but also sitting in Germany, right? So there is something like the Bitcoin ETF out there. Have the promises of these Bitcoin ETFs been held so far, or are we still waiting for a US-based version of a Bitcoin ETF, which then opens up the space once more, right? Everybody calls for the Bitcoin ETF, and actually it is there already over here in Europe, but it's not there yet in the US, right? What's your opinion about this? Do we need it? Are we still awaiting it since we are awaiting this product since 3, 4, 5 years, right? What's your opinion on this?
Maybe I can say from our point of view. I mean, it's always good to have something else, but you have to know, I mean, can you sleep well with the volatility? Because it's more or less always a buy and hold thing, So, and yeah, from our point of view, I can say with our algorithm trading and our automatic system, which reduce these big waves, I think this is maybe for let's say for a better night's sleep, the better version of going into crypto assets in general.
But you could simply purchase Bitcoin, right? And therefore I would like to go back to the question: what is the importance of a Bitcoin ETN ETF?
Actually, I need to disagree a little bit. I think we're all in the crypto bubble, so for us it's easy. But if I look at my parents, for instance, I mean, ask them to buy a Bitcoin, they wouldn't know where to start, and just choosing the right wallet. And on your search of how to buy a Bitcoin, you'll probably encounter 20 scamsters who cross your way first and scamming out of your money, and you don't know who you're ending up with, and so on. And buying something, opening an exchange account, having a wallet, let's not underestimate how big the technical hurdles are. Frankly speaking, even for me, if I use MetaMask or whatever, it's not a pleasant process, and sending these things and cashing in and out and so on. We tend to gloss over this fact, but I think it's just not ready for a large part of the population. An ETF would solve this. It's easier to buy. It's easier to mix into traditional product offerings. But of course, in a way, you're buying the worst part of the Bitcoin, which is, you're buying a product, which is, first of all, it gets even more expensive, then it gets even more illiquid. My own Bitcoin, I can just dump it if I want to, or I can buy it and I see the data directly and so on. So I think we're bringing the disadvantages of the old financial world and the disadvantages of the Bitcoin into one product, and it doesn't make it better, I feel. But on the other hand, how do normal people, especially elderly or whatever, people who don't have access to certain infrastructure, how do they do this? So it's easier said than done, I think, Philip.
Absolutely. Anybody wants to add something on this discussion?
Yeah, I mean, if I want to coin it rather roughly, I would think of a Bitcoin ETF as something of a gateway drug into the crypto sphere. When we look at our clients, we see a lot of people who have been in the crypto sphere for a longer time and have been exposed to the volatility, and afterward the funds, which actually basically outsource the volatility management of these products, right? An ETF naturally has a very retail sound to it. Every retail investor will be able to, like Jörg's parents, will be able to easily invest in Bitcoin through products like that. But even for mutual funds, which are increasingly allowed to allocate small amounts of their portfolios into crypto, they will start adopting products like those. And from there on, then think about better options of how to invest into cryptocurrencies and crypto assets. But as a starter, as a way to get used to the volatility, to the crypto ecosystem, I think products like these are absolutely needed to build the bridge between the old and the new world.
Yeah, it's an interesting point. Jörg, please.
Just to say, there's lots coming up. We see a lot of trends. We have several entities that are setting this up, and so more of these will come definitely. So there is a demand as well.
Yeah. What is the relation between crypto funds and Bitcoin, right? Would you advise or would you recommend to fresh investors, telling them first you buy Bitcoin and you try to understand it. Once you have done it, then please also talk to crypto funds, generically? Or would you rather say, no, please stay away from Bitcoin. You have ESG and this and that and so on. We are compensating all this, and therefore a crypto fund is something to compensate for the weaknesses of Bitcoin, right? So to really make it very precise, is crypto fund investment something subsequently happening after Bitcoin investment, or is it something to replace Bitcoin and its weaknesses? We talked about volatility and so on. What's your opinion here?
Maybe I can give my 5 cents here. So not giving any advice, just showing experience, how I share my experience with others, with my peers. I always tell them, there are 3 classes of investors or 3 approaches to the crypto space. One is saving for life. Saving for life, because honestly, there's nothing I would give my Bitcoins away in exchange, maybe for a yacht, maybe for a house, maybe for whatever, for the studies, for the college of my kids. But for me, BTC is a perfect store of value, and it's not about speculation. And you can invest every month, every year, every week, whatever you want. It's forever. It's digital gold. That's one. The second one is the investor perspective. I will come to this back later. And the third one, also everybody knows, that's speculation. That's day trading, that's high frequency trading, that's jumping on whatever projects in and out. My personal experience is that doesn't make you happy. You will always share the stories when you make a lot of money, and you will be very, very quiet when you lose a lot of money. And usually nobody is outsmarting the market for a long time. So, but if you like it, if you're kind of a gambler, do it. My preferred approach is the investor's perspective. That's number 2. And the investor perspective is actively managed portfolio of the best assets. It's maybe an index. We are desperately looking for an index product, maybe reduced volatility, manage liquidity, and so on. And that's on a 3 to 5 to 10 years time horizon. That's where Invalid and other companies offer help. And that's, for me, the smartest investment approach actually in the market. If you're not a gambler, and if you are not very young and you believe 100% in Bitcoin only, and you just put it into digital gold.
To be honest, I have a different opinion. I'd like to respectfully disagree here. In the traditional markets, maybe equities, they're extremely efficient, right? So if you look at actively managed funds, you're absolutely right that besides some statistical flukes, there's nobody who can really pick stocks and do it for years and outsmart the market and outperform the market. Quite paradoxically, though, in the crypto sphere, even though, as I mentioned before, the data is very sparse, we see, because the markets are so inefficient, crypto funds, which are small, but there are many of them, that do find their alpha and do outperform Bitcoin and other indices month by month, right? And arbitrage funds, that has nothing to do with speculation. It's a pure technology play.
Leon, very important point. Outperform Bitcoin. I fully agree with you. And if you go on our performance sheet, we do this, yeah. But outsmart the markets, I mean, a big index, that's really tough. And the market is more and more efficient. So arbitrage, we started with arbitrage. There's no more arbitrage in the market, at least not enough arbitrage. And so I really believe if you are a goodness of trader, do it. Yeah, why not? Yeah. But that's not my advice to the general public, and even less to professional investors. That's why I give the hope.
There is arbitrage in the market, and this is actually also a uniqueness of the crypto sphere. In traditional markets, when we look at ETF redemption arbitrage, we have companies like Flow Traders, Jane Street, Optiva, these prop shop market makers, which you cannot access as a professional investors. In the crypto sphere, it's very different. We have some brain drain, young talent moving from these old-fashioned market makers into the crypto sphere, actually needing external capital to perform the arbitrage. And we have dozens of arbitrage funds which don't show any drawdown since 3 years on a monthly basis. And they do 20-30% a year. We have Nickel Digital Asset Management in London, 150 million assets under management, Pythagoras 100 million assets under management in the US, and aggregated probably over $1 billion. And the market's just growing because the volume is there. Just the crash yesterday and the day before yesterday, we saw some 5% spreads across exchanges, which were arbitrageable. So arbitrage is a thing in cryptocurrencies, and you can absolutely use that and basically augment your crypto portfolio by investing in funds which do that, or have a long bias using quantitative strategies. And Kai would probably agree. I mean, if you look at Kai's portfolio and the strategy performance of Rubinstein Schmiedel, that's just amazing, and that doesn't happen by chance.
Thank you, Leon. Yeah, well, I mean, our strategy is to go into 80 cryptocurrencies. And well, we're doing 1.5 million trades a month. And I don't have to mention all performance. I mean, it's you can see the numbers, so that's it. And yeah, well, I like to say it again: cryptocurrencies or digital assets and artificial intelligence. This is for us the future, and our way to go.
Yeah, it's an interesting point. Last question for this round, coming also from the audience. We are now talking about crypto funds. They are somewhere in this world domiciled. We heard the numbers, about offshore funds, funds in Switzerland, UK, in the US, and elsewhere. But DeFi, with its decentralized technology, also focusing on peer-to-peer stuff, would also allow people to set up their own fund structure, in a peer-to-peer way. You have protocols out there coming out of Melonport, which are now called Enzyme and so on. Do you think that this will be interesting for the future, or do people don't want to have this hassle about, you know, setting up a technical structure which acts then as a fund, but people then have to care about the technology, about the private key and so on, because only then it's peer-to-peer, right? Once somebody else is caring about the private key, then it's not peer-to-peer anymore. So it comes with some hassle and some security issues and some needs of education and complexity. So do you see an entire new small market popping up by DAO, hedge fund architectures, you know, where skilled people, you know, knowing the technology, are setting up their own hedge funds without regulation in a peer-to-peer manner? Is this something, you know, like out of this world and never ever happening? That would be the last question for today. Who is having an opinion here comparing regulated markets with peer-to-peer DAOs?
I would. Sorry, Frank.
No.
I would say,
Kai, go ahead.
I would say the authorities will not agree with this. I think without any regulations, when it starts to these kind of products, I'm absolutely sure that the regulators will do their best to heading against this.
Yeah. I love the concept of DAOs. I really love it because that's really disruption, and I'm 100% sure it will happen. For now, of course, there's a lot of risk. First of all, there's a regulatory risk, yeah, and what I see here is that some of the DAO are not really DAOs, so they have a central governance behind. So, and that will ease it for the regulators, for the authorities to find the ultimate beneficiary, the real management behind the DAO. So some of the DAO I have seen, at least, they are pretty much naive because they are not really decentralized. That's one thing. That's a big threat for them. And as DAOs, decentralized organizations, funds, are really changing the financial service industry, my fear is that some of these smart people will end up in jail. That's a big risk. And second one is that technical infrastructure provided by some of these decentralized projects is not perfect.
Yeah.
And my assumption is that some of the bugs in the protocols are rather features made by gangsters than really technical problems. So it's very early. It's really disrupting the markets. That's why I like it. And coming back to to you, Kai, and the authorities, in Germany there's this fairy tale, the hare and the hedgehog, the hare and the hedgehog, yeah, the hare and the hedgehog, and it's, for my perspective, the authorities can never win this race. Technology, young smart people will always be already there when the authorities arrive.
That's a very nice closing word. Not much to add here. Anybody wants to add a closing remark? Leon, Jörg? Okay. Then I would like to close this round, ready to go to lunch now, right? And let's talk very soon. I think it's a very interesting topic. We also heard today that this entire market is increasing right now. It seems large with 1,000 funds, but half of them are venture capital funds, and all of the funds are very often very small still. So we are talking here with people at the forefront of this upcoming asset management industry, and I think we will have this topic, maybe also this round, regularly happening because there will be extremely much to talk about in the next months and year. Talk to you soon, and thanks for being here, everybody in the room, and also out there in the audience. Thanks.
Thanks, Philip.
Thanks so much.
Thank you.
Thank you, Philip.
Thanks, everyone. Thanks. Bye-bye.
See you guys. Bye-bye.
Ciao.